Hello everyone. Welcome back. Welcome back to my YouTube channel. It's Fierrrce here from the Fierrrce Traders as always. And guys, what this video is going to be about is it's basically an additional installment to my YouTube series, my Fierrrce Forex Fro Beginners course that is on YouTube. Okay. So first of all, if this is your first time on my channel, please like, subscribe, and share. And if you're a beginner in Forex, brand new, please, by all means, go through my YouTube Fierrrce Forex Fro Beginners series. Okay, there are 9, I think 10 videos on there, 9 modules, and I've basically broken down what Forex is to a level whereby at least you can actually do something with that information to kind of begin to trade and possibly make some money. Now, also, please note that I do have another course, my 12 weeks coaching program, which is for paid up students. And in that specific program, I do not tackle any basics. And that's why I decided to create the beginners course on YouTube, so that anybody who's brand new can first go through that installment and then come into the paid 12 weeks program. So that being said, I'm adding an installment. Like I said, this should be module 10. Still on market structure. I know I've put up a video on market structure already. And also, if you look at previous older videos on my YouTube channel, you're going to find videos on structure as well. But I just wanted this to be an addition to what I've already been creating, so that there's a flow of information for anybody who's just starting out for the first time. So for this today's topic, module 10, I'm going to be tackling structure from a perspective of intermediary structure and primary structure, or we can say internal structure, external structure, vis-a-vis external structure. So I'm going to use NZDJPY as the pair that I'm going to explain that. Hopefully it'll make sense. So let's do this. So we are actually NZD is looking so bullish. It's looking so bullish, and I think I actually mentioned that we see a retracement and a continuation, but we're really looking bullish here. We're really looking bullish. But anyway, this is a perfect example of something that can help me explain structure. Okay, and I'm going to try and keep this very short and simple. So I'm going to mark out this chart. We're on the weekly. So I'm just going to use the weekly for now. So we have, let me make this make sense. So we can see very clearly we have equal highs here. We have a high here, swing high, okay? And then we have the low here. Okay, so we have a low there. You know, I can even maybe just extend it so that you can see, but we have the low. So I'm looking at this high of 2014, and it's significant because we haven't quite taken out this high since 2014. Price literally just broke down all the way back down to the May 2012 low. Didn't quite go as low as 21st May. I think we just tapped into the demand level there, the supply demand zone there rather, or the imbalance that existed around there. So we did tap into that. Now, so this is a swing high, swing low. And if we just look at it, again, I'm doing this very deliberately. I'm highlighting these things very deliberately so that we can just see what I'm seeing. So we can see that technically price pushed, let me use this, pushed down, pushed up. Okay, I'm just going to look at the relatively equal highs there. And then now this is where we're at, right? But really the range, the entire range from up to down is technically, let me use a different, we've just been bearish, okay? So we can see from this swing high to this swing low, and then now we've made it to this swing high, okay? Okay, so there, right? Now, so we can see even as we pushed down, we saw price push down, push up, push down, push up, push down, push up, form several swing highs and swing lows in between as it's breaking down, and then finally got to a base and then began to break up, you know, and what we're seeing is lower highs, lower highs, lower highs. These were relatively equal. Then we formed another lower high, lower high, lower high. And then this was in December 2019. And then in a year later, we kind of took out the 2019 high and began to push to the upside. So we then began to see higher highs, higher highs, higher highs, higher lows, higher lows, higher lows. Okay, so definitely from 2014 all the way to 2020, for 6 years, NZDJPY has been bearish. And then we began to reverse, or we began a bullish move from 2020. So for the last 2 years, NZDJPY has been bullish. Okay, so that's very clear. Now, so what we see, so in between that, what we are seeing are intermediary highs and lows. What do I mean by that? So we have this major high, this major swing low, and then in between that, we have intermediary highs. And I think I'm just going to use a different color so that you all can see what I mean. So I'm going to use, let's say, orange. Yeah. So we can see the intermediary highs and lows. Okay. I mean, there are quite a number of them. We can draw them all over the chart if we want. Okay. So that's basically intermediary high, intermediary low, intermediary highs, and so on and so forth. So let me just remove this here. Okay, make it a bit clearer. So it's very clear to us, okay, that this is the high that began the drive of price to the downside. And this is the low that began the drive of price to the upside. Now, by the time I say this is the one that caused this swing low. So this swing high is the reason this swing low was formed by this swing high. And this swing high caused this swing low. This swing low caused this swing high. And this swing high was caused by this swing low. Guys, I'm just repeating this just so that some of these things stick. And I know that there are beginners actually watching this video, okay? Now, so this is the external high, and this is the external low. Remember, we were in a range. I drew a box there so that you can see. And in between those highs and lows, we have intermediary highs and lows. Okay, now why is what I'm saying important? Why is it important? Because you need to understand that anytime we see, and this is on the weekly time frame, okay, so on the daily time frame, first of all, the highs, the intermediary highs and lows, and the external highs and lows will also be different based on the daily structure. Remember, we're on the weekly structure. So if I'm to zoom into onto the daily structure, so let's just zoom into the daily structure. Okay, I'll probably, the area that will be of interest to me will be this zone to this zone, right? So I have my swing low here, swing high, still same target as on the weekly, but in between that is intermediary that I can see significant ones. So I'm going to put a different color and maybe make that pink. Okay, intermediary highs and lows that I can see. Okay, I'm on the daily. Now this, you can do this and you can end up having your chart just looking all colorful if you're to go all the way down to the lower time frames. Okay, so again, I'm just doing this so that we can understand what I'm trying to say. So we can see this is the intermediary structure on the daily, okay? And this now will be the external structure vis-a-vis this move up here, the external high and external low. So external structure, and then this now will be the external high. Let me make that a different color. So hopefully what I'm doing is sinking in as we go along. Okay, now let me clear the chart right now. Let me just take out some of this. Okay, go back to the weekly. So guys, on the weekly, so we know that there's the highs and the lows and all that, and we have all these intermediary highs and lows in between this trade. So this move from up here to down here, this is the trading range. this entire zone here is the trading range from high to low. So I'm going to safely assume that possibly, okay, NZDJPY is possibly trying to get back to either this intermediary high based on the weekly range and this external high, okay? Possibly. Not saying that that's what's happening, but that's a possibility, okay? And obviously we have other things like imbalances and liquidity, which we discussed in, which I focus on, narrow down in my course. Now, if we know that there is external and internal high, okay, what we can safely assume is that if price had broken structure, okay, external structure based on this range, then we can safely say that either, like if you broke down here, we were now in bearish territory, okay? Or if we break above this, so if let's say we break down below or we break up above, we have definitely taken out strong levels of structure. So external structure is the primary structure, basically. Okay, it's basically telling you the bias of the market is looking either bullish or bearish. So right now, from this range to this range, you're very bullish. And we had this, if you look left again, there was this swing high that formed this swing low. So had we taken out this swing high to the left, okay, so we have that swing high, we have this swing low. If we'd taken out this swing high, then definitely we'd be still very bullish, but we didn't. We kind of began to break down. Okay, please note that. Now, if we had also taken out this swing low, we'd possibly be targeting this zone here. Okay, meaning that we would continue on our bearish trend. So we'll continue to see that the price is bearish. Now, so hopefully that is making sense. So there's this range here, and then we have this. So this external range, okay, and then there's this internal range here. I didn't quite take out the external high there, formed an internal high. But then when we look at it vis-a-vis this range to the upside, because we pushed up and then we pushed down and formed a bottom or a support level, and then we pushed up and formed the high that didn't quite take out this high. So this was another range in between the external or the primary structure, okay? Now, when we pushed up, if we had broken out, we'd probably continue to be bullish, but then we began to go down. So if we took out this low, we'd definitely be looking at selling positions. So the reason why I'm explaining this, guys, is so that you guys can understand structure, okay? Anytime you take out significant levels of structure, it gives you the strong bias of the market, okay? Gives you the strong what? Bias of the market. So when we formed this significant low, okay, and we pushed up, this became a very significant low because we kept on coming down here and failing to break back down. We kept on going down and failed to break down, okay? And then we just continued to the upside. So we confirmed this initial move to the upside. And so this became a significant level of structure. Now, vis-a-vis what I had just indicated initially, okay, for the purpose of this example, had we taken out this low, we would have seen a very aggressive continuation to the downside, okay? But then we didn't. Now, let me now narrow it down to internal structure. So within this weekly structural or structure on the chart, we see these intermediary levels, okay, and there are many of them. Now, as we take out the intermediary levels, okay, on lower time frames, these intermediary levels also begin to form external levels of structure, okay? So we have all these intermediary levels, okay? But if I was to just zoom in into, let's say, this specific area, and maybe look left, okay, I'll see some interesting levels of structure here, okay? Let me use this so that maybe we can, I can see that zone there. I can see another zone here, possibly. I can see, so I'm just drawing this out so that you guys can see a bit clearly what I'm actually looking at. So, and you can draw this anyhow. Okay, this is again, for example, I don't draw these lines anymore on my chart, but I just want you guys to understand. So from this swing low here to this swing low, so this is the external structure. And in between that, we are forming intermediary highs and lows. Highs, highs and lows, highs and lows, highs and lows, highs and lows. Okay, as we take out these highs, okay, when, like, for example, this high here, there's this swing low here, and then there's this swing high. So this swing high, in as much as this swing high is the major structure that formed this swing low, we have this intermediary structure vis-a-vis this range that has formed this swing low. It's the reason when price began to break down, and maybe I can even maybe point it out better and say, this is what I'm looking at. When this high, this was the last high that was formed, when price broke down, it began to break down completely, okay? Now, we are seeing two levels of structure here, intermediary structure, okay? So this is a very strong external structure vis-a-vis this structural trading range, okay? So if price breaks above this, strong level of intermediary structure, it's a confirmation of the bias of the trend. So we are bullish. We took out those highs, and so we are continuing to buy. I hope that makes sense. Now, remember, this is a swing low, this is a swing high. But if you look left, we see another level almost equally to that high. So it has kind of formed a very strong level of structure, and we can look at it as a primary structure. As we began to break down, okay, we continue to form more structural levels. We formed a zone here, and then we pushed up. Now, this low here, this swing low here, in as much as we started this move down here, there was this swing low here that actually caused the shift of price to the upside, okay? Now, what I want you guys to note is this. This is intermediary structure 1. This is intermediary structure 2, okay? But if I zoom in a bit more, I can see that there's this swing low high that actually also is actually the main one that caused this drop. And we can keep on dialing it down like that. This was the first move that formed the drop, right? But if I zoom in a bit more, I can see more detail, and I can begin to see there's another significant swing high over here, okay? So this structural level, now I'm now dialing it, zooming in. So I can see this move down, okay? It was taken out, right? Now, what this means is that there was a structural level here, because usually guys are like, okay, where does price retest to? Where does price retest to? It retests to previous levels of structure, significant levels of structure. So what we see, this here was intermediary structure, okay? And then this here, based on this, so this is the inside structure in between the major structure. These are the major structures, okay? This is the inside structure. So when this inside structure was broken out, the price broke out of that intermediary structure where there was a lot of pending liquidity, price pushes up, then guess what? It retraces, and then it broke out. Now this break here actually confirmed, because this is a primary structure based on this swing low here, is what was a confirmation that we're still buying. Now, this did break out, okay, but price did not come back down here. It just lingered around here. And there's more detail into why it actually retested here. Okay, we can see another swing high here, okay, as I zoom in, and we can see when this swing high formed this swing low. So this is a second swing high on this entire range to the downside. When this swing high formed this swing low. So this was the first final significant swing high. When price took that swing high out, okay, this was the first confirmation that we are bullish. So how you enter here is irrelevant. I just want you guys to understand this was the first confirmation. This was the second one. We took out this swing highs up here. Okay, this was the last one. So we took out that high. We did come back, do our thing, but we continued bullish. So you can see that price actually, okay, this was the significant one. And that's why price lingered here. Okay, this was intermediary, but it was also kind of significant because, if I zoom in, this is a weekly time frame. So this is when March 2nd, 2020, last year. So that was a significant swing high. Okay, because we're in 2020, so that was 2 years ago. So when this high was taken out, okay, what do we see? So if I am to just let me now that we kind of understand, let me clear that because these lines tend to. So this high was taken out. Guess what happened? Price pushed up and retested and pushed up. But what we see before that, there was significant bullish momentum that took out a high of 2 years ago. That already confirms to you that we're in bullish territory. But then when it took out the external high up here, second confirmation, we're in bullish territory. Finally, when it took out this really, really external high up here, okay, and I hope you guys are not losing you, okay, that price never came back down. Please note that. So there's a difference between this swing high that formed this swing low. There was intermediary low. So of course, price came in and continued forming, okay? So these are the two confirmations. But we see that when price took out these two levels here, it kind of lingered. It just didn't rally immediately. But when it took out the significant swing high that formed that swing low, guess what happened? Price literally took off and it never came back down. So this is what I'm trying to say, guys. We have two types of structure. We have external structure or primary structure, and we have intermediary structure or internal structure. Whenever price takes out external structure, the breakout of the price is usually very aggressive and very consistent. That is where you get the trend happening, okay? You definitely learn to enter within this zone here. But even if you caught the trade here, then you're still good to go on a good trend. Of course, in my course, I literally dial it down whereby you don't have to wait for all this. But if you're just looking at it as, because again, we're on the weekly, we definitely have to dial down to the daily, for example, to be able to see the same thing, okay? So external structure. Now, if we break this structure here, then we are definitely very bullish. And that's why I think that NZDJPY, in as much as we will retrace, we will still push up and target this literally external high of 2014. So guys, I hope this video, which is basically a first glance at internal structure vis-a-vis external structure, makes sense, especially if you're a beginner. Again, I repeat as I end, external structure, internal structure. If price takes out external structure, it gives you the bias of the market, the really strong bias of the market. If it takes out internal structure, it gives you the weakest bias. I mean, the bias may still be in this, what you're seeing, but it's probably weaker, and you might find that price may dilly-dally before it actually moves in the direction it's meant to move, okay? So if you're able to look at a chart and identify, okay, different levels of structure, then you'll be able to say, yes, the market is definitely bullish, the market is definitely bearish, or if the market is bullish, this is how far I'm thinking it's gonna run before maybe we see a retest, okay, because I know it will have taken out internal structure. So if it takes out internal structure, possibly we might waver, we might begin to consolidate for a bit. But if we take out external structure, there will be no consolidation or wavering. Price will be very serious about what it's doing. So that's it for now, guys. I hope this video has added some value to your own analysis and trading and some knowledge. If it has, please give me a thumbs up, share, like, subscribe, smash that notification bell, and see you soon.